Hey everyone, welcome to Summit Metals. This is Jose.
I'm Eric.
And thank you for joining us, Stackers. So today, Eric, what we plan to talk about is fractional gold and why one should buy fractional gold.
Okay, great.
And specifically for today, we want to use both our combined powers and ages and wisdom to talk about two different demographics.
Okay.
Let's just say myself on the demographic of those under the age of 40, and for yourself, those over 40, and why fractional gold might work for different demographical ages.
Perfect. Yeah. Okay, good.
So today, let's start with talking about what is a fractional gold piece. Okay. How would you define fractional gold piece?
Right. Okay, so fractional to me is typically defined as anything less than an ounce. Mm-hmm. It kind of depends on how big you are, right? If you're a central bank and you're buying 400-ounce bars, then, you know, a 100-ounce bar would be fractional to you, or certainly a kilogram of gold. In our case, though, in the regular world out here, for us, when you're talking about gold, an ounce is kind of considered the full amount of a typical purchase in a single item, right? So anything then less than that, or a fraction of that, represents a fraction. And we have a lot of examples we'll kind of take you through and show you today that are really kind of neat. So we're excited to show it. So
and those fractionals, 1 troy ounce is typically the way to go, and it goes 1/4, 1/2. It could go towards 10 grams, 5 grams, depending on the unit of measurements. And right now, there are 3 things that we also want to talk about today beyond just what is a fractional gold, but the psychological effects of buying fractional golds, the economical and the practicalness of it. And the first thing we'll be talking about beyond what is a fractional gold is the reality for saving 1 ounce of gold. Like, how difficult is it to buy it? Like, the time of this recording, gold is approximately $2,900, almost reaching $3,000. We're in an all-time high rate. When you add a little bit of premium on that 1 ounce gold, we're looking at $3,000 for a piece of gold.
Yes.
How practical is it for someone in your demographical age to buy 1 ounce of gold?
Yeah, well, I think there's a lot of people in my age, they've had a little bit of time to accumulate. And so I think for them, it's certainly possible. I think for me, it kind of also breaks down into a couple of other things, Jose, that I think are important to think about. For example, I might be able to buy an ounce of gold, spend $3,000 on it, but I may not be able to do it again for like a year from now. So for that type of purchaser, I would highly advocate going fractional, buying a little bit every month or, every quarter, and then accumulating toward an ounce to get to that same place where you're able to ride the wave and you're able to protect yourself from the downside. So if you bought an ounce now and the price dropped, then you're just going to sustain the entire loss. Where if you're buying, say, on the quarter or on the month, you're going to stagger it down. You're going to, enhance your cost basis for your actual purchase of the gold. So for me, it makes more sense to think fractionally in that way, or to think certainly from a, kind of a weighted average or a purchase that's occurring on a set time frame. You may, for example, be a bigger investor, right? And maybe you want to acquire 50 ounces of gold. I would still suggest to you to choose a time frame and buy that in blocks as you're going out.
Dollar cost averaging.
Dollar cost averaging.
Which we will have another episode on what is dollar cost averaging and all the different methodologies.
Right. There's actually a few different methods of dollar cost averaging we can talk to as well.
People think it's only one method, but a couple.
Exactly.
So from my demographical age range, let's say in the 20s and 30s, we're starting our lives out. Some of us are going to vocational schools, some of us at college, others not. But respective of it, we're starting our lives, which also includes potentially buying a car to get to work.
Right.
Trying to pay off our student loans.
Yeah.
Going out there and trying to get married and paying for weddings.
Yeah.
And then there's those emergency costs. Like we're not maybe typically just buying a brand new car. Maybe it starts with a used car and there's like a random emergency that happens. We got to change the tire for $300, and then I'm trying to save for an ounce of gold, $3,000.
Right.
Bam, I can't buy it anymore because I have to tap into my emergency fund and all this.
Right.
This is where fractional gold comes into play, because now I get to buy a little bit without actually feeling it like there's a setback.
Well, I might say too, you know, in the very scenario you described, let's say that you had saved, you'd bought, you know, 3 or 4 fractional coins at roughly $300 each, instead of saving up and buying, say, a half ounce or even an ounce, and you did have that emergency. You needed $300. You needed $600. In fractional, it's very easy. It's hard to take, you know, for example, a 1 ounce coin like this. It's hard to take a 1 ounce coin and cut it, right, and liquidate just the amount you need for your particular spend. Where in the case of a fractional, here's an example of a Perth Mint snake. This is a very small but a really cool 1/10 ounce coin. In the example of this, you could liquidate it, you get your $300, and you're good to go. And kind of, you've made some other really good points, Jose, about, you know, why would I do that? Well, there's a number of kind of psychological drivers too, right? Once you take that money that you're trying to save and you put it into gold, for example, this Perth Mint snake, when you do that, now you're in a position where you're unlikely to spend it on something completely frivolous, right? You're not going to go maybe for a $100 meal or go blow it on some crazy thing, because you've already effectively put it in storage and you've already saved it, if you will.
McDonald's only goes up to $10, but yeah, we'll go there.
Right.
The psychological, I love that you touched on the point on the psychological effect, because for us in the younger side of things, progress is very hard to see, because we're just starting off and it's like everything is like difficult to see the end of the road. We haven't seen goals completed yet.
Right.
But when it comes to a fractional, even 1 gram of gold, which we have a wallet here, being able to fill that wallet up slowly over time just makes it seem like I actually worked towards something. I saved something.
Right. And when you need it, you know, we talked about a 10th ounce being roughly at $300. This is one of our custom Summit Metals wallets. And you can see in here 1 gram bar. This is a little over $100 right now.
Yes.
Right? You can store 12 in here. It's a great way to save. You can then take the 12, send them back to us, and we'll convert it into a larger coin if you'd like, or something like that. But there's another side of this that's really important too, because maybe in my demographic, where you're older and you realize maybe, you know, buying at $100 increment of gold doesn't make sense specifically for me, because maybe I can buy a little more. Where it does make perfect sense is with my children, and even in my case with my grandchildren. I can start them out on the right path to be an accumulator of precious metals that will serve them for the rest of their life. And this is a great way to do it. So for example, here at Summit Metals, we saw like a surge of these types of purchases, and then I'd even say these 1/10 wallets here, same kind of thing, a Summit Metal exclusive. These 1/10 wallets are another great way for me to help educate and to incentivize my children and my grandchildren towards starting to save real money, something that will be of enormous, you know, importance to them later in their life. In this case, one of the things I really like about this 10th gram wallet or 10th ounce wallet is that it holds pretty much every 10th ounce coin made. So you can see in this case, it'll be hard to tell, but maybe Cooper, we can do a zoom on it. But we've got the Britannia 1/10, we've got the Eagle 1/10, and next to it, we've got the Krugerrand 1/10. These maples right now, 1/10 maples, are coming from the Mints package. So we're kind of reluctant to take these out right now, but they also fit perfectly in here if you choose to do that. And it's just an incredible way to save. And when you fold it up, you clip it, put it in storage, it's not going anywhere, it's safe. You're far less likely to lose it. I mean, look at the size of this 1 gram bar, right? I mean, it's tiny. If you're not careful, you can lose this anywhere. I mean, it is really small, where it's much harder to lose it here, and this is so much more protected. It's just a great way to do it. And we have these wallets. You know, you can see here's an example. This is of a 1/4 ounce. We have, this one holds 4, so you've got a full ounce when you're done. We also have them in 1/2 ounce. that store 2, and we have them, I believe, right, that store, I want to say 6, right, of the half ounces. So we have a number of these different wallets to kind of fit your fractional needs in a way that no other dealer in the world provides. And it's a really, really unique offering that we provide.
And I really like that you're giving your perspective of the demographic, the older generation who have kids and families. I don't have any yet, but maybe I do in the future. But it's about the children, grandchildren, even teaching them about how to collect and save
That's
gold.
Right. Yes.
Like for me, I'm thinking selfishly, like me, like saving for myself
Right.
to start a family. Whereas from your point of view, it's how about I teach my next generation how to do what I did myself?
Right. And part of that, honestly, is teaching myself. Right. Like, I mean, being disciplined myself, setting that example first is most important. Right. So I need to be doing it. I need to be doing it for all the reasons we know of why one should be saving gold right now. Yes. But by the same token, yes, I can extend that need and that discipline and that lesson and that learning, if you will, to my children, to my grandchildren, and hopefully generations beyond that. Because the beauty of gold, this has been currency for 5,000 years. It's not going anywhere. It's not going to decay. It's not going to do all those things that can happen with everything else we own in life. This is going to last. It's going to be with you and your family forever until you choose to liquidate it, which again, you can do literally anywhere in the entire world. So that makes it just this amazing asset held by banks as a tier 1 asset, just like the dollar.
Mm-hmm. And we've been talking about the psychological effects about this. Now, for those viewers that we have who are like, I don't really care. I'm a practical person. The premiums are too high. But a lot of people aren't thinking about it from an opportunity cost perspective. You actually alluded to that earlier in this recording. That's why not buy it now and buy it over a month, because it might go up in price.
That's correct.
Now, there's something that people don't think about, which is you can't afford an ounce of gold. Let's assume an ounce of gold right now is $3,000, and you don't have the money for it. It's going to take you, let's just assume, 4 months.
Or a year.
Or a year.
Yeah.
Okay, fine. A year to get there. A year from now, let's assume it goes up 10%. And this is very reasonable because last year it went up almost over 30%.
I mean, I think as we're recording now, it's up 12% already this year.
Okay, so 10%, just very conservative right now. So that means a year from now, it'll be $3,300. But what if you just bought a fractional at a higher premium
right
today?
Yeah.
How would that impact the person?
Right.
Like,
So,
do they actually save money this way?
yes.
Would
So
they?
yeah, so to me, you're effectively dollar cost averaging up too, right? So because I'm buying for what it is today, and then say a month from now, maybe it's gone up a little bit, and I'm buying there, and then a little bit and a little bit. If you just go back, just take last year's, like real numbers. If you'd have bought 1/10 of an ounce on the month, or if you'd have bought a gram, or if you'd have bought a 1/4 ounce every quarter, under every scenario last year, you would be ahead than if you just saved till now, for example, and bought a 1 ounce coin. So yes, fractionals have a higher premium. It's not that different. People seem to think it's this crazy difference out there. And of course, as we've mentioned in other videos, they forget the fact that when you go to sell it, you sell it for more too. Fractionals sell for higher than even 1 ounce coins because they cost more to make, right? The amount of effort to make this coin, to make it perfect, in some ways is harder than making a 1 ounce coin, right? Because it's miniaturized. It's very, very small. It's hard to do this. It takes a lot of labor. That's why there's the premium. There's a lot of work that goes into it. So yes, you're getting 1/10 of an ounce troy of gold, but you're also getting an incredible piece of workmanship, right? And that's why when it's time to sell it, that too is recognized, and you get higher return on your sale than if you were to sell it, if you were to buy a 1 ounce coin and go to sell it. The premium on that, I promise you, will be lower than any of the coins you see sitting right here.
Yeah. And I've seen other people doing an analysis on this. Like, let's say an example, let's just assume gold price is $1,000 and it goes up 10%, so it's 1,100 a year from now. But if you were to start dollar cost averaging 1/10, and let's assume a 1/10 cost at the time $110, if you add it up over those 10 months,
Right.
you'd simply have the same amount as a 1 full ounce of gold.
You're going to have the same amount of gold at a lower cost basis.
Yes.
Right.
And
Yes. And by the way, if it goes the other way, let's say it goes down, and you bought a 1 ounce, right? You've set a cost basis at a certain point where if you were buying as it was going down, for example, that whole sequence, your cost basis is again better. It's better off to dollar cost average into these markets. It just makes more sense. It's really, really hard to be a trader. You know, Wall Street's full of traders with massive mainframes and supercomputers that are literally competing against you on these spot markets, futures markets. And I can tell you, having come from Wall Street, having seen the trading operations at Morgan Stanley, where you have literally floors of computers and floors of highly sophisticated PhD quants who are working against you if you decide you can be a trader and beat them at the game. You know where that's super manifest, Jose, is in our own business. I'll tell you where it is. You can, when gold starts going down, our order flow drops off.
yeah,
It does. It slows down. Why? Because everybody thinks it's going to go lower, right? So they're sitting there kind of playing the trading game. And the reality is that there's a whole herd of people right now that are convinced gold should be below 2,000 an ounce or 1,500 an ounce. But the reality is today it's closer to 3,000. They completely missed out, right? Now, contrary to that, the FOMO kicks in, right? The fear of missing out. When gold starts going up, our order flow goes crazy because people are now thinking, it's starting to go up. It's going to go higher. I've got to get it before it gets higher. They're playing the trading game. It's a mistake. You should not do that. It just will not work out for you long term. In fact, if you're an investor and you're looking at this, when you should be thinking completely opposite, right? When things starts going down, that's when you should be accumulating. When things start going up, you should be backing off. And that's kind of what dollar cost averaging does for you naturally, right? So if you're, for example, dollar cost averaging a certain amount, then when it's a little bit less, you're buying more. When it's a little higher, you're buying a little less. So you know what I mean? You're dollar cost averaging your spend into the market. When you're kind of only saying I'm going to buy when it starts to go up and then goes higher, it's really hard to establish an effective cost basis that's going to benefit you in the long term.
Yeah, and I do agree on that very much. The FOMO, especially my demographical age group, we grew up with like Robinhood and all these like easy things to trade stocks, Bitcoin, cryptocurrencies. It's that fastness of it. But when it comes to gold, you can't play it that way because one of the aspects is we don't really believe gold is an investment type thing where you become a billionaire through it, but a way of actually accumulating wealth at least I do, I think.
Well, I look at gold, we've talked about this in some prior videos. I look at it as a store of value, right? I mean, again, if you take these examples, there's so many, if I'd have had 10 kilograms of gold in the 20s, I could have bought the average price home. Yes. If I had 10 kilograms today, the exact same gold, I could buy, a $700,000 or $800,000 house now, yes. Right? But if I'd had taken that dollar and just left it in fiat currency, the amount of money that I spent to buy the gold in the 20s, that's $6,000. What does your $6,000 buy you today?
Nothing.
Virtually nothing.
Well, no
right?
home at least.
Certainly not a home.
Not even a mobile home.
It's hard in some places where you live to make your rent down payment on that number, right? So gold can be a very, very good investment. I, would disagree with you a little bit on that. So it's a store of value. It's a protection against a lot of bad things that are happening in the markets, right? We see currencies debasing. We see our debt increasing. We see a lot of things happening in the world with uncertainty. We see the dollar, starting now to decline a little bit. There's all kinds of things that are happening in the market that make gold a really, really good place to be, especially right now. So then it becomes, well, how do I get into it? I can't afford an ounce of gold. Well, actually, yeah, you can afford gold. You just need to be looking at it in a different way. And that's kind of the feature of this video is in fractions, right?
Yes. And get in. We can't, I still think you can't think of it like Robinhood or crypto where it's just going like crazy. Just consistency.
Right.
Just go in and get the emotions out of it, especially how you're just educating the viewers and your experience in Morgan Stanley. Like, don't fight against traders.
Yeah.
They're PhDs. They do a lot of things, and they work against you.
Yeah.
Just buy when it goes low. Sell for a different asset if you want it goes up.
Yeah.
But be consistent about it.
You have to remember, like when you buy a stock, you're buying it from a market maker. That person is on the opposite side of every transaction you make. So when you're buying because you want it to go up, they're selling it because they think it's going to go down. They're literally working on the other side of the equation from you. So you just factor that in. The one nice thing about the gold market is you're buying a long-term asset. So you're going to hold it for a long time, hopefully, and it's something that's going to work for you for, many, many, many years, as we've talked about. So, I maybe a little more show and tell because it's kind of fun. Let me show you. So we talked a little bit about coins, which is really fun. And let me show you. So this is an example of a 1/2 ounce of gold. This is an eagle. And this is, you can see over here, for example, here's a 1/4 ounce. We've also talked about the 1/10 ounces that are here. And of course the gram bar. Now here's an example of an eagle that's a 1 ounce. This is a beautiful, beautiful coin, like a real goal for a lot of people in your generation. To even have an ounce of gold makes them very unique in the world in terms of their solvency and their protection going forward. Other coins, ones that I particularly like this 1 ounce American gold buffalo, these are not fractionalized. There was a time when they did it. I think it was right back
2008.
in 2008, right? But since then, it only comes this way, which is why eagles are by far and away the predominantly purchased fractional coin that we sell, right? But there's other ways to do it too. One example are these little teeny bars. This is a 2.5 gram bar of gold. Look how little that guy is, right? And we talked about down there, that's a 1 gram in the wallet. Here's a 5 gram. This is an example. These are just random. This is an example of a 10 gram bar. They're assayed in these cards. They tell you exactly what they are on the back. This is an example of a 20 gram bar, right? So you can get all the way up to where you're getting into like a solid ounce and an ounce right here. This is from the Royal Canadian Mint. This is a bar, a snake. I think this is a super cool bar. We had a customer just buy a boatload of these, which I don't blame him. I think it's freaking amazing. And here's another idea that's also becoming very popular. I personally bought one of these items, and this is a 20 gram bar. It's made by Combi, but look at the back. It actually can be broken in to 1 gram bars. So you can actually break these off. It's already kind of pre-cut for you. So you're storing it in assay. It's very protected. If that day came where you needed to break it down into smaller things, it's already done for you. It's really easy to do, and it's absolutely beautiful. A slightly larger version of that is a 1 ounce bar of Combi called a Combi bar. And you can see this is broken down into 10. So now your 10th ounce in bar form that you can also save, break up, distribute, however you choose. And they even make one that's a card, let's say it's about this big. It's 100 gram, and it's really cool.
They basically make it for those who don't like the metric system. You can break it down into 1/10 versus grams to do the math.
Well, the 100 gram, I mean, if you think about it right, that's a little over 3 ounces of gold. That's an expensive bar.
Yes,
you're in the 9,000,
10 grand, around
close to $10,000. Yeah,
price.
that's an expensive bar. But again, you can break it into 100 smaller bars, which is amazing. Like, it's a great product. Combi has really hit it out of the park on that particular product. Right. This Combi bar, we sell a lot of these, and with good reason. They really, really solve a lot of the problems, and they kind of jump that void between what might be considered fractional and what might be considered a larger purchase, right? Because you're buying essentially fractionalized bars all contained in a single larger purchase of gold. This maybe is more applicable to, say, my generation, where maybe you're accumulating more, but you still want that versatility to be able to break it down into something smaller should the need arise.
Yeah, I completely agree. And one of the things I just want to at least summarize with today's discussion that we have is it's better to buy something rather than own nothing at all.
Completely agree. I think there's a lot of the analysis through paralysis syndrome out there. You reminded me, we have one other thing. I'll bring it in camera.
Oh,
This is crazy right here. Okay, so you can see on the back, this is from Scottsdale Mint, and this is 1/100th of a troy ounce. So this is 100 little teeny bars, right, all together that make up 1 ounce of gold. Again, that's a great thing for someone to buy. They can keep it like this, it's sealed, or they can take it out, distribute it to their family members, things like that. We only right now have one of these. If somebody wants one of these, they need to hit us up. We'll give you a great price on it, but it's a great way also to save, distribute, and have gold in your life.
Upon request, just
Yeah.
call because we only have one of those.
Yeah, exactly.
Uh,
They're hard to come by.
well, that's really about it in terms of things that I want to discuss from demographic, like buying now rather than later because you won't actually own it, and
Yeah.
the psychological effects about it, as well as the practicalness.
Yeah. So Jose, let me ask you. So you've been a collector of gold actually longer than I have, physical gold.
Correct.
Okay.
Physical.
When you first decided, wow, I think I'm going to buy gold, why did you actually do it? I mean, what was the real motivation, the real driver behind your purchase?
Well, I have a good friend of mine who we've known each other for a long time, and he's always told me that every paycheck he buys a piece of gold. To me, I was like, why?
Yeah.
Like, just buy stock.
Sure.
Like, how do you store it? How do you do all that?
Yeah.
And then I was like, you know what? I want a better way of saving because I keep like touching into the savings account because like, you could just move it to the other account like that. I'm like, let me buy this gold. Buy a bunch of gold. I couldn't move that gold the next day to just buy random stuff on
Right.
like
You can't
Amazon.
go to a 7-Eleven and
Yeah.
hand it to them. Yeah.
Because I really loved Amazon back then.
Yeah.
I don't use Amazon anymore.
Yeah.
And I was able to just save so much faster. Just
Right.
so much
It
faster.
just gave you that slight bump in
Yeah.
the discipline camp to buy something that would actually allow you to start accumulating your own personal wealth. Is that fair?
Exactly. Yes. And then it's easily convertible. It was just easily convertible when I needed it to transfer it to a different asset class, whether it was because I wanted to buy another stock or do something else with it.
Into a fiat currency or whatever that might
Correct.
be. Yeah. You know, it's a funny thing when people look at these assets, they think of it like I'm buying gold. In many ways,
Not at
you're
all.
moving. You're moving from one form of currency to another, right?
You're being your own bank.
You're
buying
being
gold.
your own bank. I mean, central banks are the largest buyers right now in the world. Think what the smart money's doing. We talked about these quants on Wall Street, the supercomputers, these huge leverage, like powerful banks all around the world. What are they doing? They're buying gold, and they're buying it like crazy.
And there's a reason for
You
that.
should, in my opinion, be doing the same. Now, we're not financial advisors. We're not telling you how to manage your portfolio and do things. I'm telling you what I'm doing. I'm telling you what Jose's doing. I'm telling you what thousands of our customers are also doing, and saying you should be taking a very, very hard look at doing this and doing it in a way where it's completely apart from the current financial systems of the world, right? It's not at a bank where it can be claimed. It's not in other places. It's in a place where you control it, you own it, you can take it anywhere in the world. It's yours. It's your protection going forward. And I will tell you, Jose, in my case, when I decided to move into physical gold, it was really motivated because of what I was seeing happening in the economy. Some of the things I mentioned earlier, the debasement of the currency, the accelerating debt, the calamities and difficulties that are happening around the world. Like if you're somebody like me and you feel like I need to take part of my wealth and move it into a more secure place so that I can be protected for me and for my family and those grandkids we talked about, gold is an incredibly important and meaningful place to move those assets. And that was a big driver for me. Since we've done that, and maybe we'll do something on this kind of with my investment background, when I look at creating the structure of a portfolio like I used to do kind of in my old world or my old life, if you will, in every scenario where I've modeled those things out, gold is always present, even silver. But gold in particular is in every single one of those portfolios. In other words, when you take the asset classes, real estate, stocks, even like the Magnificent Seven stocks, Bitcoin, when you take all the different asset classes that are out there and you mix them all together and you optimize that portfolio against risk that exists today, in every scenario you should have gold in your portfolio. Every single one that I've looked at. That is unbelievable and amazingly unique in this market.
And that's why I appreciate your perspective to give to like my demographical age, because if you think about it from my side, being in college, high school, seeing the 2008 crash, everything, just shielded because we're kids or you're in college. Like the biggest calamities we have is like, am I going to get a student loan for this next semester or whatever?
Right.
But like once you get more mature, you get more experience in life, you start seeing that world events have an impact in your actual life.
Yeah.
And that's where gold comes into play, and you have seen it, thus you.
Well, I think the challenge in your demographic is they haven't actually seen a cycle complete.
That
okay, right?
Waiting.
Okay, right? Like
yeah,
you're
no,
sitting,
right,
I mean, so like I remember working in the stock market in 1987. We had a huge crash, right? Then we had the one in 2008. Then we had like COVID. We'd have these kind of events that become very, very important. Since that time, though, we really haven't had a complete rollover of the stock market, right? So everybody's like, why would I do that? You know, why would I do that? Everything goes up. Well, guess what? They always forget it's the stock, next word, market. What is a market? Something that goes up and down, right? It's a real estate market. They always like exclude that last word. It's really dangerous to do that, which is why balancing a portfolio the correct way and recognizing that you have to have things that are kind of what I call non-correlated, meaning when one goes up, the other will go down and vice versa. It's that kind of combination of things moving in concert that actually allow you to increase your wealth as you go forward. Gold is a very, very important part of that. And I think that most investors, in particular, a lot of high net worth investors, don't get that. They need to be educated on that front. I hope we're doing something to move them down that path, and then doing it in a way where it's entirely yours and not attached to the other financial systems that exist in our lives for your protection is really important. I mean, imagine if you were a trucker in Canada when they froze all their bank accounts. You know, governments can do things that you don't anticipate, and all of a sudden you're effectively locked out of your money. This, you can't be locked out. You're protected because it's yours. You can take it anywhere in the world and do something with it.
And you just brought something up. It's not related to fractional gold, but just because you brought it up, for those individuals who are high net worth and looking to understand more about how to balance their portfolio, just reach out to us. We are launching very soon in the next month consultation service, specifically with you, Eric, in order to talk about how you can allocate gold into your portfolio, because we understand that that transition is very difficult, and Eric has that experience, and he'll share it with you.
Yeah, if you're interested, hit us up. We'll put you on a wait list. I want to be clear. I'm not going to provide you, quote, financial advice. I'm not a financial advisor right now. I have been. I'm not now. I was licensed in everything that every stockbroker you've ever met has been,
I've seen
and
that
more.
entire list.
So I can tell you all those things, but I'm going to tell you that what I'm going to do is I'm going to talk to you as if you were my best friend, asking me, if you were me, what would you do? To me, that's the ultimate thing, because I don't have a vested interest in whether you have this much in real estate or this much in this and this and this. I want you to be properly allocated so that you're secure and protected. I think I can help you understand that a little bit. Anyway, we're developing this. I've been working on it through the weekends, a lot of time, trying to get it structured in a way where, you know, everyone can understand it, and then it becomes actionable, something you can actually do to benefit your life. So anyway, yeah, we're hard at work on that, and it should be coming out pretty soon. Yeah.
So wanted to bring that up. With regards to today's topic, though, I just want to say I think we covered it all, unless there's something more to cover.
No, I think it's great.
And I'd like to ask the viewers right now to subscribe, hit that like button, and more importantly, leave a comment towards questions that you'd like us answered or creating a video, and we'll try to go and create that content for you.
Yeah, I would completely concur. I love the comments that are in there. We try to answer everyone. We definitely read.
We answer all of them.
Well, we read every single comment. They mean a lot to us. We truly are trying to build a community, and we want you to be part of that community. We want you to be with us. We're doing the same thing we're asking you to do. We carry products only we would buy. Like, we're quite different than I think most of the dealers out there. We have a single focus, which is to really help you advance in your own position in your life. And we want you to join us in that party, if you will. Like, let's go. Let's do this the right way.
Fantastic. So thank you, everyone, and happy stacking.
Happy stacking. Thank you.
All right.